And we are live, guys. What a day, what a morning for some of you, and day for, how are you, James? How was it waking up today in the US?
Yeah, well, I've been up since about 5, and it's funny because it started as a good morning. I have been looking at stuff ever since Friday. The news came out where SEC was not going to appeal, and I was like, how come Bitcoin isn't going to the moon right now? It should be. And then I was watching Saturday, did nothing. And then all of a sudden, Sunday morning, it starts moving. And I said, well, wait till the market's really open Monday morning. There should be some serious movement. And then it happened. But then we were hit with the complete FUD storm of, like, I've got a couple of things I can show you later when we get to it. But it's been a very exciting morning. And still, people said, oh, it's a fake app. But still, you have to realize Bitcoin's up $1,200 just in the past couple of hours still. And we had that 10% candle. It did hit 30,000 and of course faded off of that. But now it's going up to 28.4 again. So again, it's 1,600 back to the 30,000. But that was crazy volatility. And what's exciting about this though is it's a sign of what will happen when the ultimate ETF is approved.
Exactly, when it's real. Yeah.
So now people are kind of, it's like, do you remember in school you ever had to do the fire practice things?
Yeah.
So that's like there's a word for it. I can't remember. I know how to say it in German, but not in English. But the fire practice, how do you say it in Swedish? The fire drill. Fire drill.
Fire drill, yeah.
That was the fire drill for the people so they can be ready for the next time it does happen for real.
And I mean, we put this agenda before the fake news came out. So this ETF Finally question mark, we had thought to talk about anyway. We will cover that. We'll cover what happens from here. We will look at BTC scenarios from here. Things are maybe changing within the SEC. We'll talk about that. What are the remaining risks for a black swan? Is that over? Is it still ahead? What is happening with macro, the inflation, job growth, debt, and what are there any learnings from the ongoing drama in the FTX trial that is taking up a lot of the timeline on X? Is there any learnings from it, or is it just drama? Does that also impact anything on the Binance FUD? Then we'll talk about crypto for payments. We will talk about one topic that has come up. Are we getting KYC on Uniswap and the DEXs? And we'll also touch on many people's favorite subject, Solana and ETH and the relationship between them. But let's, and we can, of course, add any questions that you guys want to cover.
Let's try something new today, because just the two of us, and the feedback I got last time was just the two of us. They liked it. It was kind of more interactive and deeper. So if we see something come in on the questions that pertain to what we're talking about, there's a fire drill right there.
It is here. It is here. The fire station is just up the street here, so there's a lot of those. Yeah, and it's always when it's time to wake up in the markets. If you've gone to sleep, guys, you feel it's so boring for 6 months, you've fallen asleep. Now it's time to wake up. We have the signs outside.
Yeah, definitely. So where do we start? So what we should do is, as we're talking about a topic, if an interesting question comes in for the audience, why don't we tackle it there? And then we can drill a little bit deeper, because there's a lot of very interesting mechanics happening right now, all at the same time. Not only, the trials, the regulation, the macro, the Middle East, and it's all somehow connected. There's a lot of connective tissue between all these different moving parts. So
it is. Let's jump in and let's look a little bit on what actually happened here, because if you were on Twitter the past 30 minutes or something, an hour. Now it's deleted, but I think it was Cointelegraph that got most spread. They tweeted that the ETF was approved, that the iShares BlackRock ETF was approved. Full stop. Then I noticed that this guy, Eric, I'm sorry, I don't know how to pronounce it, Eric Balchunas, who is the senior ETF analyst on Bloomberg. And that's the guy that everyone is quoting about these ETF percentages that we're seeing here. We believe there's a 90% chance of ETF approval by the January 10th deadline and so on. This is the guy who is one of the author of that everyone is quoting. So this is like the real expert, and he's asking for source. So then I felt, that's not a good sign if the main guy is asking for source. And then I saw he was tweeting to a lot of people and asking for source, and I started feeling this might be fake. And then it turned out it was fake. Cointelegraph edited the post and wrote reportedly, and then now they have deleted it. But what do you think? Do you think this was like an accident? I saw that it was also out on Reuters, but I don't know if everyone got it from everyone or if it was like...
Well, I'm showing one that actually, people like Preston Pish are very reliable. And for him to jump the gun on this, he was one of the first out of the box. That was kind of surprising. And then it took literally about 27 minutes for this to come out. This is from Eleanor Terrett, and I retweeted this. But BlackRock has confirmed to me that this is false. Their application is still under review. And it was very clear from my perspective. We know that SEC is under pressure, but we also know there's no way that they can go from not appealing a case to approving a thing, and they wouldn't do it first thing in the morning either. It's just not how it works. So that was pretty clear. So but that being said, people know it's now an inevitability. It's a question of when. And I said that maybe it'll be definitely by Q1 2024. Right now, it's looking, a lot of people are talking about right now Q4 2023. So that could also be very interesting as we go forward. But, it was a great pump. I tried to do a little hedge because I knew it would hit 30 and fade, and I just couldn't get a fill. But anyway,
what do you think? You think it was intentional? Was it someone trying to make life-changing money on putting out a piece of news like this, or was it like an accident that someone thought that they read something while actually it was about last Friday's news and they just misinterpreted it?
I think it's one of those accidental fake news things. Is where Bitcoin pumped a little bit. A lot of people, like, as I said, on Friday, I expected to pump. On Saturday, it did a little bit. Sunday, it started to move. It was pretty clear. You could see the buying coming in, the moving coming in, especially when the Asian market opened. And then I knew it would be a good night. In fact, on my stream yesterday, I closed off by saying it's going to be a good night for Bitcoin tonight. But I think once you see a little bit of momentum, and then maybe somebody has a hair trigger reaction, they say, oh, it must be the spot ETF. And then somebody takes that. Like, you saw the type of people that reposted this and posted it. They were very, very valid sources like Preston and others. So it just caught everybody off guard. But it was pretty easy to decipher that it was probably fake, Anyway.
Exactly. So let's see where we go from here, because this hasn't really changed. That's what this gentleman, Eric, and James Seyfarth is also an analyst on Bloomberg. They're saying that their opinion hasn't really changed, that they still believe there's a 90% chance of approval by January 10th. But of course, they're analysts. They're not prophets. They try to analyze the market as much as everyone else. But that's what they still say. And just to recap what has really happened, what happened last Friday is that the SEC decided they won't appeal the loss in the Grayscale case, boosting the odds that Grayscale BTC can become an Bitcoin ETF instead of what it is today. And this we can see reflected, maybe I should make this a little bigger. This we can see reflected in the Grayscale discount, which means that how much less the market is willing to pay for Grayscale exposure compared to just holding the Bitcoin. If calculating how many Bitcoin they have and what the whole Grayscale trust is worth, you get to today the discount is only 15%, while it was down to 50% just the end of last year.
In fact, even the beginning of October is 22%.
Yeah.
So it shot from 22 to 15. And I actually tweeted as well last week that somebody had insider information, because you can see the type of movements all of a sudden kind of playing that trade option. So
it's very sharp. And it really changed here during the summer. In June, it was still minus 44% almost. So, James, why don't you explain what's the difference? Why does this matter? Don't we have ETFs already? We have a lot of different ETPs, like CoinShares has some Bitcoin trackers. There's long and short Bitcoin strategy ETFs from ProShares. They're also launching more of this short exposure even. Valor has different ETPs, Bitcoin, Ethereum, Polkadot, Solana, a lot of different products. So what is the difference? Don't we have this already?
Yeah, I think a big piece that probably people are missing is behind the scenes. There's a company called BlackRock. They have $10 trillion in assets under management, but they also have a system called Aladdin, and Aladdin tells funds of funds and funds how to allocate. Like if you have a big company like Apple and they have $100 billion in cash, they use things like Aladdin where to allocate. Now, if BlackRock have a piece of code in their Aladdin engine saying everybody needs 0.5% allocation to Bitcoin, not only does it impact the $10 trillion in assets under management for BlackRock, but it also impacts all the other funds and funds of funds and big enterprises that have a lot of cash to allocate. That's the moment people are waiting for. Like if Sweden has an ETP in Germany and Switzerland and Brazil, etc., it doesn't move big money. But if Aladdin starts allocating towards Bitcoin, that's a game changer. And also, the world has been changing very radically too. When you look at assets, and I study kind of which assets move, how many move markets. And the breadth of market movers is becoming smaller and smaller. Like we saw the S&P 500s move by 7 stocks. If you look at many of the other new stocks, they're hitting all-time lows all the time. We'll talk about some of that too with the macro later, with bankruptcies and the damage that's been wreaked by high interest rates and the lag between jacking rates and the impact on companies. It doesn't happen. They don't jack rates and then companies don't hit the wall the next day. It takes 6 to 12 months for that to happen. We're beginning to see that happen now as well. And now, if you look at the Fed funds rate, the CME futures, you probably have it there too, it's gone to zero. There will be no more hikes. They know. And then the IMF comes out and says, hey, US government, your debt's not sustainable. They added over 2.2 trillion in 13 weeks of debt. I mean, the visual behind that amount of debt is insane. And anybody, what's crazy to me is people think, wow, I can invest in the US dollar and get 5% a year. But they're debasing it at like 1% a month at this rate. It's like, what's the point? It's craziness. It's all. But anyway, we're just guys on the internet. What do we know? What do we see?
I think also it's key to understand that this is spot ETF, while there are already futures ETFs. Correct.
Yep.
So what's the difference?
Well, the good news with that is it allows people to hedge. So you need your futures infrastructure in place before big money can allocate. So imagine I'm Apple. I have 100 billion in cash and I put 50 billion into Bitcoin. I won't do that unless I can protect my downside. So I don't want my $50 billion position to go to zero. Therefore, the futures market protects it. That's why that infrastructure is very, very important. But normally the spot comes before the future. Test the waters first. The fact that we have futures is exactly what crippled the SEC in the lawsuit. You cannot have the cart before the horse. Horses don't push carts. It's the other way around. And that's the big linchpin too. That
exactly. So I think that this fact that this was fake doesn't really change anything. It's going to get approved sooner or later. And I hope we get more buying opportunities before that. So that's my dream.
My dream was like a 25K bite in September, and that didn't happen. And then I was like, knew we wouldn't get close to 25 because there's so many people that aren't on the bus, and they're saying, okay, I'm going to buy at 25 because I've missed it the last whatever 10 months. So the layers to buy, the buy wall is very strong all the way down to 25K. But then when you have people, I think it was Mike McGlone of Bloomberg anticipating a 60% dip because he believes a huge recession is coming. You could argue the recession is already here in many places around the world, but that's exactly what Bitcoin likes. It's becoming that type of, it's still categorized as a risk on asset, but in reality, it's a risk off asset. It's a safe haven. It's the new gold, and they tend to do well in times of recession. So either way you cut it, whether you look at the debasement or the recession risks or the problems in the macro, all roads lead to Bitcoin. There is no alternative right now. And I've said that for years. I sound like a broken record, but that's slowly beginning to play out right now, especially with all the uncertainty in the world.
Absolutely. So what's your main scenario for if we're looking at the price action from here?
I think, my target was always, between 35 and 42 by April 2024. After seeing the spike to 30 today, it just shows you how fast it can move. I mean, we went from, you probably have the chart there. We went from 26.4 to 30,000 in less than 48 hours. So that shows you the speed at which this asset can move. And the other thing is when you look at the fundamentals, the amount of long-term holders that simply are not selling, they did not sell during the bear, and they're certainly not selling before the halving or even after the halving. And that just shows you how scarce it is. Like I calculated yesterday, if BlackRock came in and all the spot ETFs were approved and they dropped, I think it was $58 billion today, they'd buy up all the liquid supply. That's it, $58 billion. And that's 0.0068% of just BlackRock's assets under management. It is nothing. It's still a tiny, tiny asset compared to other asset classes. So it's not going to take a lot of money to move this thing at all.
That's definitely true. It's definitely true. From a TA perspective, we are still in the same range. This didn't break out of the range. It also didn't go towards the end of the range, at the bottom of the range. So, it hasn't really changed from a TA perspective. Let's press on. So the SEC, perhaps as you touched upon, perhaps they need to kind of loosen up. What do you think? What do you see from politics perspective? Do you see that happening?
Yeah, well, definitely. I think there is a group that obviously put Gary Gensler under pressure. That's kind of Elizabeth Warren, etc., the people that just want to control everything. But right now, I think the SEC, they're not going to challenge the court decision. It does pave the way for that first Bitcoin ETF. We know it's just coming. And also the fact that BlackRock are there, nobody says no to BlackRock. BlackRock, I think it was an interesting stat like a year or so ago, or a year and a half ago, and there was some type of crisis going on in the market, in the treasury market. And they have a call log of the people that called Jerome Powell's office. Guess who called his office 3 times in a week? More than any other person by a factor of 3. That was Larry Fink from BlackRock. So the government, US government, the Fed, the Treasury, and BlackRock, they all work hand in hand. And they don't make any moves without kind of talking to each other. And that's the interesting thing. So it's just going to happen. SEC has been proven to be corrupt. Everybody's lost all faith in them. Gary Gensler did say he's pivoting towards AI because now he sees that as a bit bigger risk. And that's one of the things where you can read when people say, oh, we have to move towards something else. It's like, okay, I've given up this fight. I'm exhausted. I can't win it. And I'm going to pretend to focus on something else. And that's exactly what's happening right now. So it's only a matter of time.
I saw Coinbase then took this yesterday, right? Took this time to really toughen up and say that, come on, guys, we've asked you to clarify the rules and you haven't clarified the rules. And actually, this annoys me a lot that I actually went and checked how many employees are there on the SEC. I found this article on Investopedia. It says 4,500 people work on the SEC. I don't know if it's correct, but that's what it says here. So 4,500 people. And they cannot answer. If we go into CoinMarketCap here, so which of the top 10 or top 20 coins here, which of ones of those are securities? And they won't answer. So they have 4,800 people. I assume most of them are lawyers. So they have this enormous amount of super specialists, like the best in the world on US securities laws. And they can't answer. They don't know. They can't answer which of these are securities. But they still expect that some 18-year-old programmer sitting somewhere and has a great idea, and he goes and programs this new innovation that could become a huge company in the US, potentially making a lot of money, the next Google. He is supposed to know, or she. So that 18-year-old programmer is supposed to know, but 4,800 people on SEC cannot answer the question. They don't know, but they still want the programmer to know, and they will sue him if he, doesn't do it correct. And it doesn't matter if they go ask some lawyers, because they can't answer it either. And this is really, it's a ridiculous situation, isn't it? I actually upsets me a lot, even though I don't live in the US.
I have an answer to what they're doing. I just sent it to you as a message. I don't know if you can pull it up.
Yep.
It may not be appropriate, but this is from ABC News, by the way. This is not a fake news source.
I better Google it instead. I saw that. I think it is from 2010.
Yeah, but that's where the tax dollars go, and that's what they do. So
exactly. Anyway. I don't know. I don't bring it up.
We don't have to not appropriate, but that's you can imagine what the employees are doing at their desk every day, and it's not stopping fraud, everybody.
Exactly. So it actually upsets me that, all Brian Armstrong is asking for here is like some clarity. Tell me which coins or securities, then I'll unlist them and then keep the rest. And they can't answer the question. And but they're suing everyone anyway. I think it's just not right.
And I must say, Brian Armstrong has been a real champion as well. If there's groups like Ripple organization and Coinbase didn't stand up with the type of legal gunpowder that they have and fight back, the SEC would have destroyed crypto in the United States. So we all have to be very grateful to these two organizations for fighting back. And that is important to recognize.
It is. If we move on, then we have had a lot of disturbing news. We talked about it on last week, and we said that from historical data, even if there is a horrible crisis in part of the world, some country attacking another country, it has tended to not really be reflected in the market unless it spreads. And so far, this hasn't really spread. And that means it hasn't really impacted the market. It's exactly like we said. But how do you see that? Do you think there's a risk that this horrible crisis spreads into the world, that becomes like a bigger?
I think first of all, if you look at apparently everything I've read, and everything is probably 90% fake. So there is a player behind Iran, and Iran are behind exactly what went down. And it's all very interrelated in how intelligence was shared. The big things to me is, first of all, apparently there's groups like Palantir that are supposed to know exactly what's going on. They missed it completely. So their AI does not work as far as I'm concerned. Second of all, I think the people in Iran, etc., and Palestine, they don't want, American and British aircraft carriers in the Med. They can just wipe this place and cause World War III. I think there's a level of intelligence now within humans that know that that is not a good outcome. Let it kind of simmer out. Everybody, hopefully, at the end of the day, wants peace. I know Israel wants revenge. What happened was extraordinarily horrific in every metric you can imagine. But I think let the Israelis weed out the terrorists, and then find peace. I think that's what's going to happen. And I'm hoping that whoever's controlling the Biden administration will not be a war hawk. But then again, I was very concerned. You have this person called Janet Yellen gets on TV yesterday, and somebody asked her a question: can the US afford being in two wars? Because they're funding Ukraine right now, and can they fund this one too? And she says, yes, we can. Of course we can. You know, with all the trillions of debt that we have, and, you know, companies going bankrupt, and it is just insane for her to come out and say something like that. You don't say, yeah, we can fund the military industrial complex and the war machine. So the people in power really concern me, but I have faith that everybody knows war is not good. You know, even you have people like Putin saying things that actually make complete sense right now. But who knows actually who's behind the curtain pulling all the strings anyway. It is complex, and we don't know the full picture.
Indeed. Let's move on to macro and inflation, job growth, debt, things that we can talk about. And while preparing a little bit here, I think that this table is very interesting. Let me put it up a little bit bigger. So every year, there is a reason for increasing the debt. So this is the basically national debt. And something happens every year. So last year, it was Inflation Reduction Act. And before that, it was the American Rescue Plan Act after COVID. And then before that, it was the COVID. Then there was trade wars, tax cut, Congress raised the debt ceiling, Brexit, oil prices fell, QE ended, debt ceiling crisis, and so on and so forth. Every year, there's a reason to take on more debt. And I didn't realize, but there are actually charts on TradingView for, this is the gross federal debt. I'm not exactly sure on the exact definition of these. This goes to until January 2022, so this is 1 year, 1.5 years old. But what's interesting is that on a logarithmic chart, it's pretty much a straight line, which means that in percentage, we keep increasing this in the US pretty much constantly. Here is total public debt. This one goes a little bit longer. This goes to January 2023. On the logarithmic chart, it's a straight line, basically.
And that's now 34.5, by the way.
Yeah, exactly. So this one doesn't go all the way to present date because it's like a yearly reading. But I think that this one is maybe the one that's most worrying. This is the total public debt as percentage of GDP. So that means that if this is correct, it looks a little different from some other charts I've seen, but this is what's worrying, isn't it? That if this is in relation to the income, so to say, like the production capability of the country, and the debt is now higher than that, and that it hasn't really been in the same way. And it feels like it's gone out of control. Can ever recover from this?
No, or way past the point of no return. It's in fact that ratio, it was discovered by two Harvard finance guys, I think about 15 years ago, 18 years ago, but they discovered that if the debt to GDP goes above 77%, it's beyond the point of any return. There's no way an economy can make enough GDP to generate enough tax revenue to pay down the debt. And right now we've got this really chronic situation in the US where the interest on the debt, half is going to roll over into a 5 handle, which means they're going to pay 5% on that debt. And you take $34.5 trillion, you multiply half of that, say 17 trillion, multiply by 5%. That's the interest on half the debt. And that far exceeds the cost of defense, the cost of many social programs. And that's the problem. The debt is out of control. The IMF said it. They pointed the finger at the US. Remember, IMF headquarters, I think, are in Washington, D.C. And there's a huge amount of influence over the IMF from the US Treasury. And then the IMF says, USA, you're out of control here, guys. But it's not just the US, it's many other places around the world too. It's, it's Japan, it's Canada. Canada's in a worse situation than the US. Their whole economy and debt thing is tied to real estate. If anything happens in the real estate market, that's a great reset right there.
It's funny, before getting into crypto and starting to learn about macroeconomy, I never knew it was like this. It feels like logically, it feels wrong that you can even do it, that you can just keep adding debt until it's totally out of control and you're just pushing the problem forward. And that's fine. Nothing happens.
Well, but the thing is, what people don't realize is you have debt, the 34.5 trillion, for example, in the US, and then there's 192 trillion of unfunded liabilities that are going to be coming due.
Yeah.
So it's the debt that you see is completely out of control, but there's so many bills that need to be paid. It's just like, if anybody takes, I don't know if it's 10 hours of time to research this, they will be completely alarmed and they will get rid of their cash and they'll find hard assets in whatever form they take, because holding on to cash is the kiss of death. I mean, this thing is debasing at a space of 0.8% per month with the rate at which debt is increasing right now. 0.8. I did a tweet there the other day. If you had $100 in a bank account, and this is per Truflation in 2020, that's now worth $75. So just in 3 years, or less even.
I think a lot of people feel it, like the inflation numbers that's reported, it doesn't reflect what you feel if you go buy groceries.
Yeah, but there's a bigger problem right now, and this kind of ties into some of what we're saying. This happened over the weekend. Let me pop this up. If you can see this, Rite Aid, which is, I think, the biggest or second biggest pharmacy in the United States. They have thousands and thousands of stores. They employ 55,000 people, I think. And they are hitting the wall right now. And the question is, why? So some people say it's because of the cost of interest, but there's something happening as well. This is a huge bankruptcy surge in the United States as well. Rite Aid filed for bankruptcy, and their problem is they took on a lot of cheap debt for years and years, and that rolled into much higher expense. So yes, there's other things like the opioid crisis and people maybe stealing from stores, but it's the distressed debt that is making them hit the wall. Stores will be closed, jobs will be lost. But look at that little blue bar on the bottom right-hand corner, the surging, and we're not even through the year yet. That's only first half of the year. It's going to get really bad in the second half of the year. And the reason for that is this. When they increase interest rates, what people don't realize is credit conditions get really tight, the cost of servicing debt goes really high, and companies simply cannot pay. Nor can they bring on more debt because nobody will lend them any money because the credit has tightened up. Now we're seeing the lag between peak US interest rates and insolvencies. Again, it's 6, it's 12, it's 18 months. This is what's going to cause a severe amount of problems over the coming quarters as we go forward. And I think now, for the first time, the Fed now looks, it's like, okay, a third of our banks are insolvent. We've lent out nearly $1 trillion in the BTFP program. We've got bankruptcies going through the roof. We just had Rite Aid, which is a huge company in the US. I mean, imagine a nationwide pharmacy. There's two of them, I think, Walgreens and Rite Aid. For one of them just to go bankrupt and hit the wall. And this is after other big retail stores like Bed Bath & Beyond and etc. It's a big catastrophe happening. And then there's a commercial real estate crisis. And it's the damage, the financial Armageddon. Took a little bit longer to get here, but it's coming and it's going to be ugly. And those that have debt, whether it's a Bitcoin miner or a retailer or a bank that has bad debt on their books, they're all going to hit the wall because this is the damage that the high interest rates you got.
Yeah, it feels like it has to happen, right? And it's both consumers. I know that in the US, a lot of people have fixed interest rates and that loans for their mortgages. That it doesn't happen, but I think in many places, at least here in Sweden, a lot of people have a mix of interest rate. They have some maybe locked up for many years and some for 1 year, 2 years, and some 3 months and so on. And so for most people, I think that's an insane cost increase. And then, so they might consume less than if they are getting hit by the living costs. And then company as well, many companies have borrowed money. They have credit in some kind to finance their operation. Then their costs go up also at the same time as maybe demand goes down. And it feels like this should lead to increased bankruptcies, just like your chart showed there. And that was actually very interesting. I hadn't seen that one before. So if that continues in the second half, it will be as much bankruptcies as during the COVID year. Did I see that right?
We're on track for more, yeah.
We're on track for more bankruptcies than during the COVID. With everything
this could equate to the global financial crisis, and may even be more of that if you track the equivalent years, like 2009 versus 2023. And it's going to get.
It feels then that these guys here on the the Fed target rate FOMC meetings, they should soften up a little bit. The market prediction hasn't changed that much, except like you said, there is really
no chance of a hike. It's like 9% or something, which is
exactly 7% for the next meeting in November, and that's very low. Then majority think there's no more hikes, and then reduction for mid next year, just like it was before. Oh, sorry.
But I guarantee you, the things like what happened, the announcement of the Rite Aid bankruptcy, I know it's just like, who cares? It's a pharmacy store. No, it's the number one or number two pharmacy store that's everywhere across the United States.
Yeah.
And I know the Fed is probably saying, what happens if we have 10 more of these types of organizations going bankrupt, which they will. There will be more banks hitting the wall. There's more shoes to drop. There's more companies going bankrupt. You have the big car companies in the US being held over a barrel by a union. If they meet the union demands, the car companies go out of business. It's that simple.
Yeah.
Everything is really, really bad. It's a whole tinderbox, a powder keg of gunpowder, and the fuse is like 2 inches away from hitting. It's going to explode. So
it is. Let's move on. FTX trial. Have you followed anything? What's happening? Or
loosely, but it is kind of interesting, some of the stuff that's going on there. Again, I did prepare a little slide, which is kind of interesting. So what I'm interested in is the probability of him going away for life, which is would be a great thing. So this is his kind of a rap sheet of all the counts that they have against him. I hope that is showing, but you've got 6 counts of conspiracy to commit commodities fraud in FTX, 5 counts of conspiracy to commit securities fraud in FTX, 7 conspiracy to commit money laundering, 4 conspiracy to commit wire fraud, 3 wire fraud on lenders, 2 conspiracy counts to commit wire fraud on FTX customers. And then it has the number of years for each penalty. So if you take 6 times 5, that's 30 years, 5 times 5 is 25 years, etc. You get to 160 years pretty quick. Now, for that particular trial, all they need to do is, beyond reasonable doubt, prove he did one of those things. So I think no matter how, it just takes one juror to say, no, he's innocent, he's fair. But the type of the disclosures made by people that used to work with him in the inner circle, how they were directed to do things, that he knew exactly what he was doing, and he had backdoors, and how he traded against customers and manipulated markets and stole customer funds to play. I mean, should be a very slam dunk case, and the prosecution has done an excellent job of turning all the witnesses to testify against Sam Bankman-Fried. The inner circle, the Wang guy, and then the Caroline Ellison. Caroline Ellison, by the way, her father employed Gary Gensler.
Yeah.
So when you hear the stuff about, they wanted to keep the price of Bitcoin down, how true or not that is, I don't know. They were definitely manipulating markets, as we know. But when you look behind the curtain and you see all the interrelationships between all these gangsters, it's shocking. And then they need to make an example of this. This type of stuff, it happens in a 20-year cadence. Look at all the big Ponzi's and fraud schemes. Every 10, 20 years, you get a big one. But what really gets me is how you have, again, top people in Congress, how he bought favor by pumping hundreds of millions of dollars into political donations. That also needs to stop. That's criminal unto itself.
But if taking a step back here then, so I mean, I'm not the lawyer, I don't really understand the different charges and so on, but if taking a step back, it feels like, okay, so people deposited money, everyone thought they had the money, turned out they didn't, they took the money and traded with them, and they kind of lost it. Oops, I lost it, because didn't use stop loss or whatever. So money is gone. Isn't that exactly what the banks are doing? You know, we deposit money, then they go and trade them, and only there they lost them on government bonds. They thought they would go up, turned out they went down, so they lost the money, and then they came and say, sorry, we lost the money, and then they get the government bailout, and everyone say, oh, poor you, it was so difficult for you to predict this, and then you know, carry on. Well, how different is it really? Isn't that exactly the same?
That's a good angle to think about. Yeah, you know, the old what was the word they used during the global financial crisis? Too big to fail. The car companies being bailed out, too big to fail. The big financial institutions, the laymen, etc., too big to fail. You got to solve this and sweep it under the rug and issue some cash. We saw that happen in Switzerland earlier this year with Bank Verein and Credit Suisse. UBS is Bank Verein. I was a customer there for 30 years, so
I know the brand. It feels like it's not that different. That's what's scaring me a little bit. Like if taking a step, then I'm sure, I mean, they probably edited documents and things that are illegal. But like on the global picture, they took the money from depositors and lost them by doing the bad trades, and that's feels like that might still go on as we speak in a lot of banks around the world. And
there's a super interesting crypto angle of that too, because, you know, bonds are always considered a safe haven. You'll always get your minimum return, but literally we've had a 38-month drawdown in bonds. That's never happened in the history of the world. So bonds as an asset class are now toast.
Yeah.
What's the other side of that trade? You need a bond alternative, and whether that be Bitcoin or yield-bearing Ethereum, that's a huge opportunity for crypto as well. And I think that's what has many of the government officials a little bit concerned.
Yeah. Yeah, because I mean, that's always been the case. The safest thing you could own was government bonds. Now they dumped like an altcoin. And that's what wrecked all these banks. They didn't think it could go down that much, but it did. And let's move on to this thing might come out of this also, because one thing that apparently or allegedly they did was to kind of try to get regulators to go harder on Binance, according to the reporting from the trial. And some people saying that, okay, but then now that anything that came from FTX or those individuals, no one wants to touch anymore. And that maybe means they back off a little bit from the attack on Binance, if it turns out that that was actually directed from FTX and SBF and team. What do you think about this? Do you have any insights here?
Well, the way I think about it, a couple of things that did come out of this case, and we all know, everybody, if you use an exchange, use it, do your business, buy what you need, and take it off immediately. And it's getting, and I'll come back to that in a second, but it's very difficult to say whether or not the Binance FUD is over. There's still a ton of speculation. I know I'm probably very confident now that they used to maybe recycle customer deposits and you trade against them like FTX did. That was the interesting angle here, because that all came to light. We had a feeling FTX and Alameda were doing some crazy stuff, but now it's pretty clear, yes, they were doing stuff, but maybe Binance is doing the same thing, or has definitely done the same thing, especially in the early days, like 2018, when it was very much the Wild West, before they started focusing on compliance and regulation and stuff. But I think the key is, if you are in crypto, get a handle on self-custody, the more you do self-custody and the less you leave your tokens and Bitcoin, etc., on these exchanges, the less they can use them to manipulate the price against you. And that's important. Did Binance do shady things? Probably. Are Binance protected? Yes. They notice there's no headquarters. You can't go after them. CZ is a very smart guy. Not saying he did anything wrong or criminal, but allegedly they probably did some kind of borderline shady stuff against customers, moving stuff around. We saw a lot of weird wallet transactions this year as well between BUSD and other types of assets. And because the way crypto is real time, it's 24/7, and you can obfuscate any transaction pretty easily, I'm sure games were played. It's too tempting not to play those games for these people, perhaps. Rehypothecation, price manipulation, fractional reserve enterprise. You know, what do they have? They had that thing where they could, like, you had this whole campaign, SAFU and verifiable funds and all that type of stuff. We don't hear about that anymore. Why is that?
Yeah.
And it never was truly verifiable. So,
yeah, I mean, my conclusion from the whole looking at this FTX and thinking back on all the, I mean, it goes 10 years back with Mt. Gox, and I mean, I've lost count how many exchanges have gone bankrupt. It's like most leading exchanges have gone bankrupt at one point. And the conclusion is really, it's not possible to see from the outside if they've lost the money on the inside. That's where you actually need the SEC and, you know, subpoenas and everything, someone going in and really looking and checking if the money is still there and so on. That's where we need it. And that hasn't really happened in any single case. It's always come out later. They've gone after easier companies, perhaps, where everything is public already. You can go on the internet and claim they've done something wrong. But yeah, so we don't know. That's the answer, and we won't know. The next time it happens, it will be very difficult to see it from the outside as an outside observer, I think. Let's move on to a happier topic, because we have, for example, Ferrari starting to accept cryptocurrency as payment for their products, being their cars. And I felt that I think a lot of companies, or all companies, will eventually follow. Why wouldn't you accept any major currency that your customer wants to pay in? So I feel that it's very encouraging to see companies with some sort of symbol value. I'm guessing that it's like a combination of marketing and just pure sales. If the customer says that I'm not going to buy your car if I can't pay in my favorite currency, then they say, okay, then you can pay in your currency. We want to sell the car. And they take the deal instead of saying, no, we only want this particular currency. Otherwise, you can't buy the car. Yeah. What do you think? What's your take on using crypto as payment, which it kind of started with?
Well, I can't verify this, but apparently they have a chief marketing officer, and his name is Enrico Gallera. I hope I got that right. But he had a lot of his high net worth customers. That's, you know, these cars are $250,000 to $2 million a pop. And a lot of the high net worth customers have come to them saying, hey, can we pay in crypto? And many of these customers are in kind of offshore tax-free jurisdictions. And also things like luxury car brands are suffering right now with the global recession. You know, how many Ferraris have you bought this year? So I personally wouldn't. But the point is, they're looking for ways to open up the ability to bring in more revenue, perhaps. And I think they're just taking Ethereum, Bitcoin, and USDC, just those three. It's not all crypto. People are saying, oh, they're going to take Dogecoin for Ferraris, beat Elon or whatever. But no, that's not true. Just the three big ones. So I think it's good, but it's specifically for wealthy clients. They're trying to satisfy the needs of customer requests, which is good. They're listening to their customers. But they'll probably take, you know, people think, oh, it's a big deal and Ferrari's going to handle a big bag of whatever crypto, but they'll probably take in Bitcoin and convert it immediately to lira or euros or whatever. Lira, that's an old currency.
Yeah, I think so too. They're just using it as payment. They're going to sell it probably because they're low margin business. Probably they cannot afford.
Oh, Ferrari's a high margin business.
Is it a high margin?
Yeah, for a car company, very high margin. Yeah.
Oh, yeah. That's good.
Yeah,
but
where they make their money, if you have a Ferrari and you need new brake pads, you're talking $4,000. So it's the parts and service are very expensive. You go to the track for a day, you burn through 4 tires real quick, and each tire is $1,000. So that's.
But a lot of other companies have running low margin business where costs are a big part of it. For example, credit card costs. I know you mentioned that on one of your previous videos. And do you think that crypto is going to start being used more as payment, both out of convenience? The people want to pay with crypto and they don't want to deal with the hassle of going to the bank, and the bank don't want to accept it because they don't know what it is and so on one side. And then there's also a cost benefit. It costs a lot of money to receive payment with traditional means.
Yeah, well, I give an example. If you take it's like Ford Motor Company, globally they make 2.5% net margin. All right, if they were to accept credit cards for payments for their vehicles, they'd be making -0.5 or -1% net margin, because the credit card company chews up 3%, 3.5%, maybe in some cases 2.75%. But that's a huge cost. And I calculated recently that the second biggest overhead for retailers after employees is credit card charges.
Yeah.
So blockchain can do it better, cheaper, faster. And it's coming.
Exactly.
And that's going to disrupt the credit card companies. That's why Visa partners with Solana right now, 11th biggest company in the world, because, keep your friends close, keep your enemies closer. They need to be the first to move to protect themselves. They have to cannibalize themselves in order to survive. That's what they call creative destruction. And that's the big credit card companies are seeing that. And you see MasterCard doing things too in the blockchain arena as well. So we're going to see huge disruption over the next 3 years in this space.
I think so too. I think it's going to come. Crypto for payments will be very real. Let's cover two more topics quickly, and then we take some questions. One thing that came up the other day was this, that Uniswap is adding functionality called hooks, where then it's possible to kind of hook in KYC verification. So we won't go into the details of it, but do you think that decentralized exchanges will be allowed to continue in the way that it is today, where basically it is permissionless? Anyone, wherever they live in the world, they can go in and swap USDT for Ethereum, or if they're using something like Thorchain, they can swap Bitcoin for stablecoin or another chain or something. And they don't need to ask permission. They don't need to upload KYC. And this is different from privacy features because the track record is still there. It's still public. But it is permissionless. There's no KYC. What do you think? Do you think it will get to continue, or will it, start jailing everyone who publish something like this until it stops, until morale improves?
Well, I think I look at it in much more simple terms. I'm not up to speed on KYC hooks, but I can imagine what it is. You've got to, it's funny, KYC, if you take Uniswap, their headquarters is in New York City, NYC.
Yeah.
So they have to be compliant, or else they don't want the wrath of regulators shutting them down. Of course, they'll just bounce offshore if that's the case. But I think you have DEXs, decentralized exchanges, that are Dino, decentralized in name only. Really, they're not completely decentralized. And you're going to have technological decentralized exchanges that are going to be just pure peer-to-peer, pure code, and absolutely decentralized. And I think no matter what we do, it's going to be impossible for regulators to shut those things down. If you are in control of your own wallet and your own assets, nothing can stop you from using these code-based systems to trade. I could trade with you. Hey, you want to swap some Bitcoin for ETH or whatever? You and I will have a technology that'll enable that real easy, and nobody will know we're doing it. And that's the future that cannot be controlled. And that's what makes things like regulators very nervous. And that's why they can't even begin to think about how they can write laws to regulate it, because the world is changing so fast. You look at the AI revolution, everything is spinning at 100 miles an hour. Like you, who understand technology better than 99.99% of the world, like how can you feed a video to AI so it can learn by itself? In your life, did you ever believe that was possible?
It has. First, when I started with AI, I thought it would go faster. Then nothing happened basically for 20, 30 years almost. Basically. Yeah, 30 years. And then that's the nature of this technology. Suddenly, it has gotten good enough. And it reaches the inflection point where it becomes day-to-day useful for almost everything. And from now on, it will keep getting like twice as good every year or couple of years until it can do things that are still unimaginable. And if you asked me 3 years ago if I thought it would have come this advanced now, I would have said no. So I think, yeah, absolutely, it will continue to baffle us with it, and it's going to replace so many jobs. So better think about, guys, where you are in the value chain. If you're somewhere where you can be outcompeted, you will be outcompeted, then better move into doing something else higher up in the value chain. Maybe learn investing by watching DCA show every Monday and things like that. We have one final thing on the agenda before we take questions, and that is one of our favorite topics, and that is Sol versus ETH. And if we look at that, it's been kind of in, maybe we step down a little bit on shorter time frames. So this is then Solana divided by ETH, and we kind of had two phases. One where Solana was...
You need to share your screen.
Oh, I'm sorry. Absolutely. Thanks.
But there's also, while you're pulling that up, there's also an interesting point of reference. You know, Bitcoin hit 30,000 today briefly. And I think Ethereum was still around 1550. But remember, not too long ago, last time Bitcoin hit 30,000, ETH was at over $2,000 or hit $2,000. And it just shows you how ETH is not doing well, either from a money flow perspective or against Bitcoin or anything else. It's very surprising.
Because I think what stands out, if we just look at this from a little bit distance, is that Solana had this big run up versus ETH. Then it turned down, went this way. And the question now is if we're seeing the first steps of another leg in this direction. That's, I think, what's interesting with this picture. And it could be a little bit too early to say, but it is definitely interesting from a TA or trend analysis perspective. I like both projects. I don't have any particular pet project or anything here. And I mean, everyone thinks that you're all in Solana, but it's like a small fraction of your capital. But it is definitely an interesting development that's been recently, where Ethereum, which is like the OG, the inventor of smart contract, it has really, been challenged by quite a few other projects. And in my opinion, Solana is one of the most interesting projects.
Yeah, well, the other problem is there's so many layer twos now on Ethereum, and they're all trying to capture value. So they're all kind of eating away at the mothership in one way or another. When you look at the fees and the transactions, is at the end of the day, unless Ethereum can solve their scale and their fees, they're just going to be eaten away by the layer twos. But the layer twos come with their own set of problems. The ability to verify a transaction in almost real time is very difficult, especially with the zero knowledge proofs and everything else. So there's a lot of handicaps there for ETH with all what I call the band-aids. Each layer two solves a problem for Ethereum that it has. And the question is, with all of that kind of deficit of code over the last 8-9 years, Can they change the wings on the plane and really bring sharding to fruition? And if that's the case, what'll that do to the layer twos? And then even if that is the case, can they even catch up with some of the layer ones that exist today that are more decentralized, faster, cheaper, more scalable, etc.? I think the most interesting thing in the whole of crypto, the most interesting narrative in early 2024 will be Fire Dancer. If you can have two distinct code bases, both scaling at near 1 million transactions per second, guaranteed uptime, that will change the whole world, and be interesting to see what happens then. It'll be interesting to see as well what users do, because a big part of it is not only where the developers go, but where the actual users go to transact and how they transact. The other thing that's kind of interesting as well is all the EVMs and SVMs that are now capable, so you can do cross-chain transactions as well. So it's all happening very fast, and it will be a very exciting 2024, and the narratives will be very different. So I've always believed in what I call the black hole theory, and that is, in any space you have, there's always one leader, whatever it is, especially with disruptive technology. You take Google for search, you take Meta back in the day for social, you take Tesla for EVs, you take whatever it is, Bitcoin for store of value. That'll be kind of the big elephant. In time, we haven't got there yet, but it will overtake gold eventually, as long as things continue the way they are. But we'll see what happens with this crypto space.
Absolutely. Let's take a couple of questions. Let's start with this one. Should I exchange all my ETH and SOL for BTC for now? First of all, we cannot tell you what to do, because your situation is, each person's situation is individual. But what we can say with certainty is that the trend in Bitcoin dominance is still up, and that didn't change today. And if we exclude the stable coins, so we only look at the speculative coins, meaning Bitcoin versus speculative altcoins, it's even clear that this is still an uptrend. There will come a day when that changes, when that one turns down. And looking at the history, that tends to go really fast. It's a couple of weeks only where the altcoins really shoot up and give higher gains, and radically higher gains often than Bitcoin. Then the Bitcoin dominance will drop off a cliff. It hasn't started doing that yet.
Yeah, Jakov, is that a Swedish name?
Not typical Swedish name, so I don't know.
But I think what you need to do is, actually, you can maybe pull it up. Pull up a Sol ETH chart year to date. You'll see it's up 80%. Pull up a Sol Bitcoin chart year to date. You'll see it's up 65%. And that's kind of where you need to know. And then calculate the expected values going forward over the next 12 to 18 months. You will be surprised. So Bitcoin will move, but it won't move near as fast as other assets. And the mystery is why Ethereum is so weak. But what's your year to date there? Yeah.
Yes, it was 100%. It was 100%. So approximately. Yeah, ETH is really very weak, and it has now we're on the BTC chart, so ETH versus BTC, which eliminates some of the speculative movement versus USD. And we see here that Ethereum hit this resistance area, couldn't get past it, and it has kind of started dropping down in a very sad motion since then.
And that's historical levels actually we're seeing right now on the ETH BTC chart. Yeah. So I don't like selling at bottoms. And if there is a bottom for this, we're pretty close. So that would be
absolutely.
I think financial advice.
The thing with trend is that if you something has trended for a long time and you realized, shit, I should have, done this and that. It's rarely a good idea to try to chase after it. That train to take action was a long time ago. Then even if you discover it now and realize I should have, doesn't mean that it's the right thing to do it now, because you might be at the end of whatever trend you identify. So let's take some other questions. Maybe we should recap, because I see a lot of people have asked what happened today. So what happened today was that there was fake news that ETF, the BlackRock iShares ETF, was approved, has been approved. Turned out that was fake, and for that reason, price went up like with a spike up to 30K. It actually hit 30K, and then it retraced. But the Bitcoin is still up quite a lot today. It's up 3.37% still after that. So that's what happened today. Let's see. We have a lot of comments. I jump to the end. Looks dark already in Sweden. Yes, it is dark, but we are happy still because Bitcoin is moving. We're always happy. Anyway, let's see. I've seen a lot of YouTubers say the fake news this morning will be ammo for Gary Gensler to further delay. That's a good question. Maybe it was Gary who leaked the fake news to say, look here how this is manipulated. But I think the news was on Reuters, wasn't it? It wasn't.
It was. It hit Reuters and all the rags for Bitcoin. No, I don't think that's a concern. Gary has a legal problem. You know, it's real simple. Don't overthink it. You can't approve a future without a spot. That's it. That's the case. He has to approve it. And he's out of excuses to delay.
Exactly. And
by the way, if a spot ETF is approved with all the futures infrastructure in place, that will ultimately dampen the volatility. So for him to say, oh, it's too volatile to approve a spot ETF is an idiotic thing to say if that's the case, because if you do approve it, the volatility will go down. So the answer to volatility is approve the spot.
Exactly. Then I have to put up this comment. CTO has a great green screen, but this is not the green screen.
He pays for live.
It's actually the door here. This is real. It's real life. It's not the green screen. So yeah, I had to comment that.
Yeah, that's a good point actually from Bill Wammers out there in the Schweiz. He said Bitcoin isn't volatile anymore. If you look at the relative volatility of Bitcoin, Tesla is actually more volatile than Bitcoin this year. Think about that.
Yeah, definitely. It has been stable as a rock, BlackRock in BlackRock's honor. It has rarely been this stable. Usually Bitcoin has been in a crazy uptrend or crazy downtrend. It's rare for it to be this flat, this long actually. So we definitely will not stay in this range forever. That's what we can say with certainty, because technology just doesn't move that way. Let's see.
There's an interesting question from Trent S. out there.
Yeah, you can read it while I look for it.
Yeah, he asked, will the narrative of tokenization of real-world assets be big for crypto? And the answer is absolutely yes. And for those who don't know, tokenization is the process of converting real-world assets into digital tokens that can represent things like real estate or a fractional ownership of a piece of art or a timeshare holiday place or something else. You can tokenize anything. And that's going to be a huge narrative. In fact, I did a video last week on the impact of that on Ethereum. And it's basically how it takes the Ethereum price up to $8,000. 25% of that price action will be driven by the tokenization of real world assets. And that was published by a firm called Standard & Chartered. And they broke down all of the use cases for crypto and the impact on price of Ethereum. And I took it further and broke out the impact of the price on Bitcoin and Solana and other stuff too. So absolutely will be a big narrative. But also there was another question regarding Web3. I think we're still looking for that use case. You know, things like NFTs and stuff were kind of fun, but they get real boring real fast. And you see that with the price of NFTs tanking like crazy. But I think payments will be huge. Once payments move to the blockchain, once credit card companies or even retailers, I know Amazon is doing a lot of research right now on how they can enable crypto payments, they don't get hit with the charges. One of the reasons Amazon have a credit card is so they can reduce their credit card charges, and they have a special deal with Chase to make that happen, which is part of JP Morgan. So stuff is happening behind the scenes, but I think the biggest use case for like forget Web3 and NFTs and all that crap. If you can nail payments on the blockchain, that will be $1 trillion use case.
Absolutely. Now I lost the comment here. I couldn't find it again. But Ian Morris Films asked what sectors in crypto will pump during this cycle, like next cycle. Gaming, DeFi, privacy, meme coins, Doge, etc. Do you have any particular areas that you follow, James?
Yeah, I don't. So when you look at the spaces, the gaming will be huge because of adoption, but the way the gaming tokens are structured, they're all money grabs. They have terrible tokenomics. So it's like you're not going to make any money buying those assets, but it will be a big use case. The gaming industry is massive, and I'm interested in tracking because the biggest gaming company in the world is a company called Microsoft, and I haven't because I don't play games, never have games. I don't know anything about games. I just know it's a huge industry, but it'll be interesting to see exactly how Microsoft is positioning themselves for gaming. And I know they are working behind the scenes on bringing digital assets into the gaming world so people can buy things like swords and shields or whatever they buy within the games. But that will be interesting. And there's a lot of gaming traction happening in places like Korea, where there's a lot of gamers as well. So the merging of gaming and blockchain is already becoming very real over there. But the big thing will be payments, tokenization, true peer-to-peer kind of commerce using blockchain. I think that will be very, very big as well.
Exactly. Bull365 asked, how fast should we expect BTC to moon after the launch of the ETF, like the real actual ETF? What do you think about the time frames?
Well, we got a taste today of Bitcoin going from 26.8 up to 30K. So we had a 10% candle in 5 minutes, which is big. Now, if it becomes real news and not just people looking at Twitter being fooled, you could see easy a 10 to 20% candle happening. The thing is, after these spikes, you have a lot of gamma squeezes and short squeezes, and that ups the price beyond a natural pricing level. So typically after a huge spike, there will be a fade back down over time, but it's hard to say. That's why I believe either 35 to 42K is highly possible by April 2024, because by that time, I do believe the spot Bitcoin ETF will be in play. And because we're in a situation right now where there's so much liquid supply, the price just has to go up. And that's also in anticipation of the halving, which for the first time ever, it will be on all the mainstream media. They'll all be talking about it. And it'll be a fun time.
So. Exactly. There should be two steps, right? One is that it pumps on the news like it did today. Imagine if this had been real. Yeah. Now it was fairly easy to at least hesitate and think that this might be fake. And then 10 minutes later, it was confirmed fake. But imagine if it's real, then it's going to really pump. But then what will happen in the next step is that big funds, like pension funds, big people, they will start thinking maybe they should have 2% allocation in Bitcoin or something. And then that should put the continuous buy pressure. That's the thesis, at least. That's why people are, so focused on this. Is that fair to say?
Yep. Continual buying pressure will happen over a period of about 36 months. So the money will trickle in. It won't all come in day one. It'll be slow and then faster, and then they'll slow down again over 3 years. But it's that the perpetual drip of demand and how that meets a liquid supply will be the most fascinating economic experiment we've ever seen in our lives. So I'm excited for that.
And so this comment, James, thoughts on the ETF approval will affect ETFs in other countries, for example, Canada has had a spot BTC ETF for a few years. What do you think about that? Will it kind of spread?
Once again, I go back to what I said at the beginning. Think of Aladdin, that big AI allocator that's used by fund managers that comes from BlackRock. Once the algo in that thing gets tweaked to an allocation towards Bitcoin, everybody else will follow. So think of BlackRock getting a spot ETF approval. It's a rubber stamp for them to tell people to allocate towards Bitcoin. That will cause a revolution around the world. And it'll be gradual. It'll be over 3 years. But the allocations of things like pension funds that no longer can be 40% allocated to bonds because they just got raked over the coals. Those pension funds are deeply underwater right now. They have to get alpha. Where are they going to recoup all those losses? Where? Like if you were, say, 30% in the hole in your pension fund and you've got hundreds of thousands of workers that need money, you don't have that money, what would you do? Yeah. You need something that is safe and something that'll generate alpha and something that has a track record. And there's not many of those things.
I think a lot of customers will want it also. That's at least my feeling when talking to a lot of people in real life. There's a lot more people interested in Bitcoin that care to admit it in public. Yeah. Bill, is Paxos still under attack from the SEC, or is this over now? I don't know. I don't know that they have any issue. I think the issue they had was that they had Binance in the name, and the regulators didn't like Binance, so they delisted that one. But they have identical stablecoins without Binance in the name, and that's not used in some sort of partnership with Binance, as far as I know. But remember, guys, there's nothing safe here. Like USDC was the safest, that was marketed at least as the safest that could ever be built, the safest stable coin. And then I was coming to work here one day, and on my phone, I'm realizing that USDC is depegging now, because turned out that they had some of their money on Silicon Valley Bank, and Silicon Valley Bank lost the money just like other companies lost the money by gambling on government bonds in this case. And they did bad trades and they lost the money. And suddenly turns out that there was 3 billion or something of Circle's money that was sitting there that was supposed to back USDC. So suddenly that one wasn't safe either. And then, everyone we throw money from BUSD to USDC, and then USDC to USDT, but USDT is also not safe. So my take on that question is that there is no safe way to store the capital in crypto that has no risk. There is always risk. So the reward also has to be high. This is not the pension saving in that sense. Everything in crypto has a risk to go down. So there has to be a good reward also. Otherwise, it doesn't make any sense in that sense. So should we take
one more? Then we gotta go.
Yeah, we are
a long one, hour and a half.
We are critically over time, and yeah, let's see.
There's a question regarding Tesla earnings. I can tackle that real quick.
Yeah,
it's hard to say. I think there could be a surprise from two areas. One could be FSD uptake, and two would be Megapack storage business. They could surprise and they could shore up margins. But I do expect Q3 to be weak. I think everybody does. They shut down factories. They release new models like the new Model 3 refresh. So don't expect a miracle.
Yeah. All right. So an exciting Monday for everyone.
Very exciting.
And I'm excited for the week.
Yeah.
And it's darker in Sweden than in Germany right now. That's because we're further north. The further north you go, the darker it gets in the winter.
Yeah.
Winter side.
Good. Well, thank you, sir, for having me. Next week, back in my spot. And let's see if we have some really cool breaking news next week. But again, the fire drill. You should have called this made
Exactly.
the
This was the
fire
fire
drill.
drill. We had the
Yeah.
evidence outside the window. This was the real fire drill. We forgot to say also, Ivan will be back. He's just traveling this week. And yeah, see you all next week on Monday.
Awesome. Thank you, everybody. Thank you, everybody in the audience. CDO, you be careful. See you soon. Bye.
See you soon. Bye.